Our topic now is your allowance for doubtful accounts. So for allowance for doubtful accounts, you need to just remember how to account for possible bad debts or possible doubtful accounts. So in allowance for doubtful accounts, we need to determine the doubtful accounts expense and the amount of the allowance, or the bad debt expense or the amount of the allowance. So you can call it doubtful accounts expense. You can also call it bad debt expense. Okay, so let's start first by determining or what are the methods of recording your doubtful accounts. So there are two methods or two approaches in recording your doubtful accounts. That is your income statement approach and your balance sheet approach. Under your income statement approach, we have here the percentage of sales. In balance sheet approach, we have here the following. First, percentage of AR. Next, we have your aging of AR. So under income statement approach, the amount computed here is known as the bad debt expense or doubtful accounts expense. And the amount that you need to squeeze or to compute after you get the percentage of sale is the allowance for doubtful accounts expense or allowance for doubtful accounts end. In your balance sheet approach, the amount to be computed is the allowance for doubtful accounts end. So what will be squeezed is known as your bad debt expense or your doubtful accounts expense. So I hope we are clear that if in case we're using income statement approach, that is your percentage of sales, the amount that you compute out of that is the bad debt expense or doubtful accounts expense. And what is squeezed is the AFDA end. For balance sheet approach, the amount to be computed is your AFDA end, and the amount to be squeezed is known as the bad debt expense or the doubtful account expense. Okay, so let's start first with your percentage of sales or your income statement approach. So under your percentage of sales, that is equal to your sales. Normally, whenever we talk about sales here, this is your credit sales. You multiply it to the percentage of doubtful accounts. And what you will get here is the doubtful accounts expense. After you compute the doubtful accounts expense, the next that you need to squeeze is the AFDA. So how do you get for the AFDA? For AFDA, we have here your beginning. You place on the credit side the doubtful accounts expense. On the debit side, you have your write-off. And on the credit side, again, you have your recovery. After that, you can now compute for the ending AFDA. So under income statement approach, the process is that first, you need to compute for the doubtful accounts expense. And how do you compute? That is your sales multiplied by the percentage. After that, you need to compute for the AFDA end. Okay, that's for percentage of sales. Next, for your balance sheet approach. For your balance sheet approach, we have your percentage of AR. So under percentage of AR, you get your AR, you multiply it to the percentage. The amount that you will get here is the AFDA end. The amount you will get here is the AFDA end. Therefore, your next step is to compute for your doubtful accounts expense. So again, you place the AFDA end here. The amount that you have just computed here will be placed here. And then you have beginning you have write-off, you have doubtful accounts expense, and you have recovery. So what you will need to compute is the doubtful accounts expense. So the process under balance sheet approach is first to compute for the AFDA end, and then next you compute for the doubtful accounts expense. Doubtful accounts expense. Okay. There's not much to discuss here in your percentage of sales and percentage of AR. It is quite easy. But uh, so that we can see their difference, let's have an example. So assuming your sales is 5 million and then your AR is 2 million. You have a write-off of 30,000. You have beginning AFDA of let's say 12,000. And then you have a recovery of 20,000. So assuming your percentage is 2%. Assuming your percentage is 2%. If you are using percentage of sales, then to compute, we just multiply the 2% to the sales. So 2% of 5 million is 100,000. And this is now your doubtful accounts expense. And on your off the T account, we have here your beginning doubtful accounts expense, and then recovery. Here is your write-off. Then you place here the end. So our beginning AFDA is given 12,000. Our doubtful accounts expense, we have just computed it at 100,000. And then we have a recovery of 20,000 and a write-off of 30,000. So our ending is 102,000. So see, what we first computed here is the doubtful accounts expense and then the off the end. But if we are using percentage of AR, we just need to get for the AR, we multiply it to the percentage. So this will give us 40,000. What is this 40,000 again? This is the off the end. The 40,000 is the off the end. Therefore, in our T account, this is the AFDA. We have here beginning, doubtful accounts expense, recovery, write-off, and then we have here your end. We place the 40,000 as part of your end. And then we plot the write-off of 30,000. We plot the recovery of 20,000. We plot the beginning of 12,000. So how much is our doubtful accounts expense? It is known as 38,000. So the first thing that you need to compute in percentage of AR, what will you compute again? It is the off the end, and you will squeeze the doubtful accounts expense. Under percentage of sales, what you compute using that percentage is the amount of our doubtful accounts expense, and the amount to be squeezed is the ending of the. Okay? So I hope hindi kayo malito dyan kasi yan lang naman ang normally nagpapahirap sa topic na to. Nalilito sila kung ano yung nako-compute nila doon. Pag percentage of sales, ang mako-compute mo gamit yung percentage ay doubtful accounts expense. Pag percentage of AR, ang mako-compute mo gamit yung percentage ay yung of the end. Bakit? Kasi sales, makikita natin yan sa income statement. Between doubtful accounts expense and AFDA, alin dyan yung makikita mo sa income statement? Doubtful accounts expense. Next, AR. Saan natin makikita yung AR? Sa balance sheet. Between doubtful accounts expense and AFDA, saan yung makikita mo sa balance sheet? AFDA. Kaya pag ginamit mo ang percentage of sales, ang makukuha mo ay doubtful accounts expense. Pag ginamit mo ay percentage of AR, ang makukuha mo naman ay AFDA end. So sana hindi na kayo malito dito. Kasi normally, nagkakamali lang naman yung mga nagtitake or sumasagot ng ganito dahil nalilito sila kung ano yung amount na makukuha doon. So, take note of this. One postulate of accounting is matching. Therefore, whatever you compute, you match it to where it will be placed. If you are computing it based on the sales, it should have been placed in the income statement, and that is the expense. In AR, balance sheet, what is recorded or reported in balance sheet, it is known as AFDA. Okay? So, Basically, we're done with your income statement, the percentage of sales. And for balance sheet approach, we're done with percentage of AR. So what's left under balance sheet approach is the aging of AR. So under aging of AR here, the AR is categorized based on its age. The approach of aging can either be days outstanding or days past due. Days outstanding, days past due. In days outstanding, this is only the normal age. Normal age. While days past due, you count it from age from the due date. Age from the due date. Okay, so let's say for example, AR. We have here age. 0 to 30, 31 to 60, 61 to 90, 91 to 120, more than 120. Okay. And let's say the amount of 0 to 30 is 100,000. Masyadong mababa. Gawin natin 1 million. 1 million, 200,000, 300,000, and then 80,000, and then 50,000. So those are the amounts. 1,200,000, 380, and 50. And then you are given here the aging. Let's say the aging, if ever it is 0 to 30, it is 2%. 31 to 60, it is 3%. And then 61 to 90, it is 5%. More than 90, it is 10%. Let's say that is aging. So let's look so the difference of days outstanding and days past due. Let's give additional information. Assuming the credit term is 210 and 30. 210 and 30. Okay. So if ever that is days outstanding, you just need to get for the AR amount, you multiply it to the aging schedule. So in your 0 to 30, what is the amount? 1 million. 31 to 60, what is the amount? 200,000. 61 to 90, what is the amount? 300,000. 91 to 120, that is 80,000. So ang more than 90 natin ay 80 plus 50. So this is 130. And the aging schedule is that 2% for 0 to 30, 3% for 31 to 60, 61 to 90 is 5%, and more than 90 is 10%. And from that, you can now compute for the amount of the end. How about in your days past due? Under days past due, what we need to look at is from the date of the credit term. When is the due date of the credit term? 30 days. And after that, you need to convert the age based on past due. Based on past due. You convert the age based on past due. So this is the age, right? 0 to 30. Is that past the due date? Is it past the due date? It is not yet past the due date. Therefore, hindi yan past due. 31 to 60. Is it past the due date? Yes. Ilang araw na siyang past the due date? If our due date is 30, so 31 less 30, 1. 60 less 30, 30. So yung 31 to 60, na-convert na natin siya ng past due 1 to 30. That is 200,000. And then let's convert 61 to 90. How many days past due na yan? 31 to 60, 300,000. Sir, paano nakukuha yung 1 to 30, 31 to 60? So this is the normal age. You deduct the due date. The due date is 30. So 31 less 30, 1. 60 less 30, 30. So past due na siya ng 1 to 30. 61 to 90, past due na siya ng 31 to 60. 91 to 20, past due na siya ng 61 to 90. More than 120, past due na siya ng more than 90 days. Okay? And then you plot it again. You just multiply it to your aging schedule. Our aging schedule is, if it is 0 to 30, 2%. 31 to 60, 3%. And then 61 to 90, 5%. And then more than 90, 10%. Ganyan siya. So, If in case, kung magkakamali man kayo, ang problema lang dito ay ating days past due. So, anong poproblemahin nyo dito? How to convert the age of the AR as a past due. You convert the age based on the past due. So, once you convert it in the past due, you just need to multiply it again. You just need to multiply it again with the percentage. You just need to multiply it again with the percentage. So, in our amounts here, 200, 380, and 50, you multiply it to the percentage. Okay. So, let's now try to remember the concepts we have just discussed. So, initially, we have here your AR. We deduct allowance for sales discount, sales return, freight charge, and lastly, your doubtful accounts. For doubtful accounts, we have your two methods or approaches in accounting. So what are your approaches? First, we have your income statement approach. Second, we have your balance sheet approach. So under income statement approach, we have here only the percentage of sales. And again, the amount computed using the approach under percentage of sales is the doubtful accounts expense. The amount to be squeezed is known as the allowance for doubtful accounts. Under balance sheet approach, there are two methods. That is your percentage of AR and your aging of AR. Under aging of AR, we have two. That is your days outstanding and then days past due. Again, the amount to be computed in your balance sheet approach is the amount of your AFDA ending, and the amount to be squeezed is known as your doubtful accounts. And then finally, we also talk about the T account of AFDA. The T account of AFDA is composed of your beginning AFDA plus doubtful accounts expense plus your recovery less your write-off, then you can now get for your ending AFDA. You can now get for your ending AFDA. Okay? That's it for doubtful accounts and bad debt estimation.